Good morning and welcome to this weekly market update from MRC Markets. Today is the 21st of March 2014. What we'll do today is go through some technical analysis on Euro dollar, cable dollar, Swiss and Aussie. As we do these videos on a Friday, I'm just going to review what's gone on this week in terms of moves, and then give some sort of outlook for next week as well. I will not make any trade calls recommendations in this video. Trade at your own risk. If you could please read our full disclaimer on our website, which is www.mrcmarkets.com. that would be appreciated. Also, for any new followers out there, we have 3 moving averages on each of these charts, so that's meant to be a 50, not 55. Yeah, the red one is a 50 simple moving average, the purple is a 100 simple moving average, and the gold is a 200. So I'm just going to quickly update this template here. Right then, let's have a look at the euro dollar. I've put up a clean chart on this one because, well, the stuff that we were looking at last week, I mean, you can see there's been just by looking at this weekly candle, things have broken down a bit. So in terms of the levels we're looking at last week, they've pretty much just been smashed through. But we did say last week that, I mean, there's been how many weekly candles in a row? Pretty much, was that 6 there? 3, 4, yeah, 6 weekly candles in a row. The odds are for some sort of retracement. I mean, of course, it could still continue to fly up, but if you get 6 green candles in a row, I mean, if you just look back through the charts, it's very rare that after 6 you'll get. I mean, I think maybe down here 1, 2, 3, 4, 5. Well, that was 6 there. Then we got another big red one. So yeah. It's just history repeating itself, really. So the odds are for some sort of retracement, and that's what we've had this week already. And of course, things can change. Obviously, I'm doing this on this video. It's a Friday today, so there's nothing stopping it settling down here and ripping towards the upside. But it's looking like a bearish retracement week this week. And in terms of stuff I'm looking at, in terms of fibs, because obviously we do these. I mean, this is the week. We don't want to dwell too much on the massive longer term charts, but it is good to keep some perspective. So in terms of, and I still think it's in a solid uptrend, in terms of bullish uptrend on this weekly. In terms of the longer term view, I'd expect it to keep on grinding higher. So in terms of sort of bullish fibs, I mean, we're just looking. This one here, this is from the yearly low to the yearly high. And the 50% comes in around previous support as well, and it's also previous resistance around here as well. So I'm going to zoom in again, actually, so it's a bit clearer. So yeah, previous resistance around here, previous support around here as well at the 50%. So the 50% comes in at 1.3722s. This is a setup I'll definitely keep my eye on if it does come down towards this area. But also, what a lot of people will be looking at is this sort of recent dip here. Which is also, if you flip it to the 4 hour, it's pretty much the low of the chart to the high, so you can see it nice and clearly there. Then you can see the 61.8% retracement is currently supporting. That comes at 1.3766. It also coincides with sort of previous resistance area around here. You can see where I'm hovering over the cursor. But you can see we're currently getting stuck around, was it 1.3785. So you can see we had a gap here to the left, remember, and gaps always, well, they do tend to act as decent support and resistances here. So we sort of filled that gap, and you can now see these candle spikes are now acting as resistance, which is interesting to see. So I would not be surprised to see these sort of 1.3780s hold and perhaps come down to the more healthier retracement area of the yearly low to the yearly high fib. That's what I think could happen, but of course it doesn't have to happen, and this move can hold and we can rotate and perhaps take out new highs, etc. So it'll be really interesting to see, and definitely in terms of a weekly candle close as well. But well, I'd say the daily close is more important, but what is interesting on the daily is that we have closed below that 1.785. So that's why I think maybe we may get some sort of resistance here, and it could come down. But no, definitely this yeah, the weekly close would be interesting, and daily candle close would be interesting as well, but I would not be surprised to see it come back down. I mean, personally, I think this 50% here will be a much better level as well. I think you get a bigger bounce up there, because you have more convicted buyers, I'd have thought. I mean, more people will be looking at this fib here than this one here, in my opinion. But no, we just have to wait and see, and that's pretty much it, to be honest with you. Actually, one other thing we'll keep a look out for is actually, let's leave it on this daily. Let's say if we do get a healthy sort of bounce up here off of this current level, people who'd be looking at that yearly low to yearly high fib, I'd say you'll get some interesting sellers coming in at this fib here. And interestingly, this 50% coincides these sort of spike highs to the left here, where I'm hovering over the cursor. You can see spikes there, so, and there's also previous support as well around there, you can see, which, so it could turn into new resistance. So this sort of 50% 61.8% range from 138.50s to 138.80s, that could act as interesting and decent resistance. And yeah, that's pretty much the outlook on euros. I mean, what's happened this week is that we've just had a retracement. You can see it's pretty much in two candles. What's the famous quote that go up the stairs and come down via the elevator. It really is true, because I mean, the things do come down quicker in terms of these markets. You can see the bearish candles do tend to be bigger than the bullish candles, and things really can come down quickly, and gains can be erased very quickly. But yeah, that's euro done. Let's have a look at cable. I've left the same chart up as last week, so I think it is still important, and it's good to sort of show what happened this week. We spoke about, well, we left this fib up, so this is the fib. You can see it clearly on the daily, but in terms of the 4 hour, it is the chart really. So it's the lower the chart, so the higher the chart. And we spoke about these 50 pip round numbers acting as really decent support and resistance, and that's what's happened this week. And you can see the 165s acted as we came back down, tested as 165s, came back up, then we got sold off at 166.50s. We closed below. We got some sort of pop up of this 50%, but you can then see these 165.50s here acted as, well, previous support acted as new resistance, and we brought it back down. And it looks like we're going to come down here and test these 61, this big 61.8% retracement on this 4 hour, and that comes at 1.64. 699, so let's just call it 1.64 70s, and it should be interesting to see how it reacts. But you have to keep in mind on this daily where we are, and in terms of this weekly as well, the weekly we've been speaking about, it's been due a very healthy retracement. You have to remind, last year was a really bullish year, and you can just see it looks like it's just coming off a cliff at the minute. We chopped around here last sort of few weeks. I remember saying last week's video I would not be surprised to see it. Well, I've been saying for pretty much all year that it's due a healthy retracement, and it looks like it's starting to happen now. And you have to remember where these moving averages are as well on the weekly chart. I would not be surprised to see over these next sort of few weeks, few months, to see it come down to this 50% level. But the only thing that's going to stop that from happening is the fib, in my opinion, I think, from the yearly low to yearly high, which is that fib we're looking at on the 4 hour. So that is the swing low there, so that swing high, and I think the only thing that can sort of save it currently is the 100-day moving average. You can see it's currently supporting that, but it's the 61.8 I think will be the key pivotal line for cable. And I think there'll be a lot of desperate buyers at that level. So what I reckon will happen is we'll come down to 61.8 and get a brief bounce up, and then perhaps get capped at these 165.55, these 1.6550s again, or even this 50% line, and get sold off. Because I do think this weekly chart is very key, and I do think we'll come down towards this 50% in the near future. But yeah, in terms of the rest of the week, today it's definitely that one, the 61.8s, and even the start of next week. So it could just chop around today, you never know, or you could come down and test this 61.8 and then it chop around for the next sort of few days, Monday, Tuesday, Wednesday perhaps. So it'll be interesting to see where we are next Friday when I do next Friday's video. Dollar Swiss, I've left this up from last week because it's the fib, the kind of fib that I thought was fairly interesting in terms of the 4 hour term, and the reason it sort of shows what's happened this week. I said the 61.8s, the 50%, this sort of range, could act as some sort of resistance. It acts as a brief resistance for a brief period of time, but interesting enough, we came down off the 61.8. In fact, I'm going to zoom in a bit so you can see a bit clearer. So we came off the 61.8, spiked down to the 50%. Previous resistance we spoke about. That's why I thought it could be quite an interesting fib. But surprise, surprise, previous resistance acted as new support near the 100 SMA as well, and we've rotated higher and broken out off of this fib. So let's just flip it back out actually to the bigger time frames and see what is going on the weekly. Yeah, so I left these two levels up on the weekly chart as well. I said the 80s, the 0 spot 87 is nice round number. Yes, where we're sort of coming off of at the minute. That's where we've come off this week, getting a brief rally. But I still think in terms of this overall weekly picture, it's due to come down towards this 50% in my opinion. But it is also due a retracement towards the upside as well, similar to Euro on the weekly in cable. It's due a retracement. We've had that retracement this week. It's been pretty much mirror image chart, this dollar Swiss and weekly, this dollar Swiss and Euro dollar for a while. So the fib that I'm personally looking out for is the fib from the high of the year to the low of the year on this daily chart, similar to what we're doing on Euro dollar and cable as well. So yeah, that 50% comes in at the 0 spot 89.26, and that also, what's interesting to see is that we have previous resistance at that level and previous support as well. So that should be a key level, and I think it's just going to keep on grinding higher, to be honest with you. But you can see last week's weekly candle, there's quite a bit of upper wick. Sorry, this is the daily. What am I talking about? The daily. Yesterday's daily candle did have a bit of upper wick, so I would not be surprised to see it retrace. Well, it already has started to retrace today. So this would be in terms of shorter term moves, in terms of, I don't know, today and next week. If we do continue to retrace, this will be a small fib I'll be looking out for. And let's flip it to the 4 hour. You can see it nice and clear as well, or even the 1 hour chart, it's still valid on the 1 hour chart as well. So it's pretty much the low to the high on this 1 hour, nice and clear. The 50% comes at 0 spot 87.83s, and that's pretty much it in terms of dollar Swiss. You can see on the 4 hour we got capped at the 200 SMA as well. The moving average is acting very nicely. But in terms of the weekly, I'd say it's still due. So I'm just going to clear up this chart now. So in terms of weekly perspective, I think it's due a retrace up towards the well, in fact it looks like it's due a retrace, and perhaps we're going to get up to the 50-week moving average. But the overall picture, I'd say even the bigger picture is at this fib here. I'd expect it to come down to the 50%. So if we scale it down to the daily, it's then all about the fib from the yearly high to yearly low. So we have that move there. But then don't forget that yesterday's daily candle, a bit of upper wick, so I'd expect some sort of retracement. And if we do get a retracement, then this is the fib I'll be looking out for, which is on the 1 hour. So in terms of buying opportunities for a grind higher towards that sort of 50-week moving average, etc., this would definitely be the move I look out for. And there's a bit of previous resistance as well. I do like having previous resistance, previous support at the fib lines. I think it just gives you an extra bit of juice at these key fib levels. But that's this is how I've got my chart set up at the minute. To be honest, it's just this 1 hour looking for a retrace. I mean, some people be looking at these sort of small fibs here. I'm not a great fan of them. I don't think they're that decent, but you can see it's acting okay, but not that technical. So I'm just looking at this one here. The reason I like looking at the more obvious fibs is because they're sort of valid on more time frames. So I think you get more people looking at them, which means more people looking at them, there'll probably be more orders at these levels, which means that they should react much better. Also, actually, look at the 61.8 here. It's got previous resistance at these levels, so that should act as decent support if we get there. Also, it could line up with the 200 SMA as well. So keep an eye on that. But yeah, that's dollar Swiss done, and that's definitely the fib I'll be keeping an eye for, because it plays out on all the different time frames: a daily, 4 hour, and 1 hour as well. Aussie, I've left this chart up from last week. We spoke about the 0 spot 90 handle, acted as previous support, and it's acted very nicely this week on this 4 hour, off the 200 SMA, the 100 SMA as well. Nice rally we've had over the last sort of couple of days, really. You see that on that daily chart. Actually, if you flip it, look at that 90 handle, that lovely reversal candle we got off of that, and you can see it's just rotating higher. So it'd be interesting to see what happens at the 0 spot 91. I do think it will get there. Looks like it wants to get there, because remember we had this previous wicky candle there, big upper wick. I'd expect it to break that, to be honest with you, and then grind towards this fib that we've been speaking about for quite some time now. I'd expect it to break that and grind high towards the 50%, which comes in at 0 spot 92.07. So I'll draw that, the 0 spot 92 line as well. So that's definitely a key level, coincides with that 50%. But yeah, it has to get above this 200 SMA as well. You can see we've had multiple tests, but I think the more times it tests it, the more times it's obviously it's just the more chance it's got of breaking. Just imagine it being a floor or a ceiling. The more times you stamp it, the more chance it's got of breaking. But it definitely, I mean, it's making high lows here. I think we will get up to this 0 spot 92s. But in terms of the rest of the week, it's all about the 0 spot 91. Really, that's the key sort of line in the sand. I think we'll get up there. If we are going to get up to this 50%, it has to break above that, obviously. So yeah, just keep an eye on the price action there. We can easily get another reversal, and then it reverse back down to this 90, get another reversal again, and pop up. So currently, it's just chopping in between this 100 pip range. And that's pretty much it in terms of the Aussie. Okay, then that's all for today. I hope you found that video useful. Hope you have a great rest of the week trading, and I'll catch you next Friday. Thanks for watching.